Welcome to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm talking to you from New York City on this 17th day of August 2021. I do want to remind you that I'm the editor of a newsletter called Jay Taylor's Gold, Energy, and Tech Stocks, and you can sign up for that by going to miningstocks.com. We like to plug Chen Lin's letter, What is Chen Buying, What is Chen Selling? Go to chenpicks.com for that. And Michael Oliver, who's with us today, we also like to remind you to go to olivermsa.com to pick up on what Michael is doing and really to consider subscribing to Michael's excellent work. I have to say, Michael will be with us in just a couple of minutes here, but I have to say that he was once again very helpful to me recently with this smackdown in the gold price. It does sort of unnerve you unless you can see the bigger picture and the momentum and structure, and that's what Michael looks at, and we'll be talking to him about that in just a couple of minutes. So I do also want to thank all of you for listening to this show, making it one of the more powerful, bigger shows on the Voice America Business Channel. Also like to encourage you to send along whatever comments you have about this show to questionsfortaylor@gmail.com, questions4@gmail.com. Our sponsors for today's show: Novo Resources, LOO Resources, Hannon Metals, Labrador Gold Corp, Lion One Metals, SK Mining Corp, NV Gold Corp, and Firefox Gold. And by the way, in a few minutes from now, we will be speaking to Patrick Highsmith. He's the chairman of Firefox Gold, to get an update on that company's very exciting exploration target in Finland. A really underexplored area that with a great deal of promise and some good drill results so far. So we're looking forward to talking to Michael in the second segment of today's show. I've titled today's show, Profiting from the Coming Dollar Collapse. John Rubino, Patrick Highsmith, and Michael Oliver are with me. In 2004, John Rubino and James Turk wrote The Coming Collapse of the Dollar and How to Profit from It. In part one of the book, titled Why the Dollar Will Collapse, the authors passed along a quote from John Maynard Keynes, who stated in his book, The Economic Consequences of the Peace, Keynes said, and I quote, "There is no subtler, no surer means of overturning the existing basis of society than to debauch the currency. The process engages all the hidden forces of economic law on the side of destruction and does it in a manner which not one man in a million can diagnose." End of quote. So, indeed, Keynes is right about that. People don't understand where inflation is coming from. You're probably going to hear people say it's COVID, it's shortages, it's supply chain issues, anything but the really basic cause of inflation, and that is the debasement of the currency, or the debauchement of the currency, as Keynes called it, massive inflation of the supply of money. And we are in that in a massive way, the biggest way that I can remember in my 74 years of life in America. And so here we are, 50 years after President Nixon set the stage for America to be sucked into a spiraling debt vortex in which the only response our Federal Reserve can have now is hyperinflation of the supply of money. And now, in the process of doing that, destroy our free market capitalist system that has made us the wealthiest country in the world. With the destruction of the American Republic and its economic system well underway, and now with America's geopolitical dominance looking very shaky in light of the loss of Afghanistan, how much longer can the dollar survive? With the Biden administration spending trillions upon trillions of dollars that can only be funded with computer money or money created out of nothing, can hyperinflationary destruction of the purchasing power of the dollar be avoided? Those are all topics that I hope to discuss in some detail with John Rubino in the actually in the final segment of today's show. And as I mentioned, just Patrick Highsmith will be with me in the second segment. But right now, I'm really happy to tell you that Michael Oliver is with us once again to give us an update on those markets that we watch most closely. Welcome, Michael, and thanks for joining us. Talk to us about what's on your mind. What is most important to you right now that we should be watching?
Well, a couple things. Since mid-June, remember the Fed came out with their statement, their minutes, and it hinted at, at some future date, maybe 2023, they might taper. Okay, so gold tanked. It was about 8 or 10 trading hours, actually, it dropped. And it took several weeks to base and turn back up and have a nice rally. And then a Fed governor came out last week sometime and made a statement to that effect, saying might be sooner as they tank gold again. And also, there was also the coincident nighttime selling of tons of gold, by who knows what. And you can have a conspiracy theory about that. It seems to me most of the conspiracy theories, I think, are false, but that one strikes me as kind of funny, because if the broker were selling that much gold that quickly for a private client, he wouldn't do it that, recklessly.
No.
I mean, the guy's losing money on the sale, it's collapsing. Mm-hmm. Instead, he would feed it in slowly over a period of time and distribute out the guy's long position. But no, it was intentional. So whoever did it, I don't know. They don't control the market. History's proven that. Go back and research the IMF gold sales of 16 tons of gold from 1976 through 1980, trying to suppress the gold market, and it didn't work. Okay, so yes, there may be government forces that do this, but ultimately gold has been trading at twice where it was in 2015. So, they're not under that much control, okay? But anyway, what's so interesting is that over the last 6 trading days, gold has regained $120 from its traded low early last week. And nobody's noticing it much, not financial press. $120, okay, decided day versus the December contract low. Okay, but I think what I'm really watching is this. I had an itch this morning, and sometimes when you have a methodology, no matter what your realm of professionalism is, medical or scientific, whatever, sometimes you have an itch that comes from the cumulative knowledge that you've got cooking around in your brain, okay? I can see the pending breakage of the leadership symbols in the stock market. They look like they're setting up for something near term to start the process. And I don't mean crash, I don't mean a March 2020, but I'm talking about if the NASDAQ 100, SOX Index, Microsoft, Amazon, and Apple, if those symbols start breaking good, solid momentum trend structures below them, and they have them, in other words, the structures are built, and if you build a structure and you're sitting on top of it, it's something to break, in other words. And you can't go down unless there's something to break. Well, they built that something to break, and they're not all that far away from the beginning numbers of the process. I'm suspecting that we're going to start to see that unraveling process among the leadership of the market soon, very soon, like in the next days, weeks, and especially in this quarter, such that by the time you get into next quarter, it could really start to unravel. So that's what we're monitoring right now. Well, why is that important? Well, because the Fed knows good well that if the stock market gets weak, and let's say just 10%, it's going to hurt sentiment. And we noticed that consumer sentiments dropped sharply recently.
Right.
Some of these metrics that the Fed is watching aren't upticking; they're downticking. The financial press is pointing to the inflation, but the Fed is seeing numbers that unemployment aren't getting to their levels. Consumer confidence dropped surprisingly to them. I think even some industrial production numbers didn't come in quite where they wanted them. You add to that a weak stock market, and I don't mean a crashing one, but just a weak one, and they are not going to taper. At Jackson Hole meeting, they're going to come out and they're going to push it off again. And I think gold knows that. I think the people investing in gold, the big money people, sniff that as other asset categories weaken, they better own more gold. And I think that's the process we're in right now. So watch the leadership in the stock market. That's what we're focused on at MSA, defining the downturn in Microsoft, Apple, Amazon, SOX Index, NASDAQ 100, because when they go, the market's going.
So
I
Michael,
think that will be go ahead.
Yeah, what I understand you're saying then is here they talk about taper and gold goes up. Would you expect gold to tank?
Yeah. Huh? In effect, the Fed reaffirmed what the rumors were, right? A couple of days ago, there were 4 Fed governors came out and said they wanted to taper September. Okay, that's a pretty strong voice, and Powell said something. But we're starting to get concerned about inflation. Well, okay, that's sort of affirming the rumor. Okay,
right,
and yet gold has rallied $120 in the last 6 trading days.
Right. Yeah.
So
maybe the smart money is looking ahead and figuring one step ahead what's going to happen. Once you taper, the market's going to tank. And then we know what you're going to do after that, because
or the market's going to tank and they're not going to taper at all. Either way, whichever way you want to figure it. But I think gold suspects that, and I think smart money is not looking at headlines. They don't sell headlines. Amateur traders sell headlines. So the people that sold that Fed news back in June and then they sold it a week ago, they're looking at themselves saying, "Well, what's going on here? It's back up, 120 off the low in 6 days." So anyway, I think we're at an interesting moment here. I think it's getting very close, and that's why the MSAs were. Go ahead.
Michael, I'm looking because I watch the gold shares very closely, of course, and it seems to me that the gold shares have been more correlated to the weakness, sort of the topping pattern of the market. I think you said the last time we had you on, you saw a topping pattern. Now it seems like you're saying it again with these key companies. But it just seems to me that we could expect some weakness in the gold shares, I would think, along with the equity market to start with.
I disagree.
Well, I hope you're right because I have a vested interest in you being.
Yeah.
But my fear always is that when the margin clerk calls, you have to sell whatever you can sell. That's so in the short run, isn't it possible we could see a stronger dollar in some of these?
Well, we're seeing one right now, but it's strong within a 3% range. It's been in a 3% range for 12 months, and that's like it's been beat down to the curbstone, and it's just flopping around down there, 90 to 93 zone. Which, when you look at that last 12 months, go back to last July even, that's the narrowest one-year range I think in the history of the dollar in terms of percent volatility from high to low. So it's a whimpering market. And where that's occurring on its long-term annual momentum is there's a trend line that goes back to 1988, 32 years, 33 years, on annual momentum that we're laying on for the last 10, 12 months on the momentum chart, where you can't get off the line, which says to me that the momentum is anemic. At the best, it's holding, and everybody who sees an uptick in the dollar thinks it's something big, but it's within a range that's so trivial, it's hardly a day trade.
My goodness. So what you're talking about here, then, if you're looking at a floor, kind of a floor for the dollar over 33 years, if I understand you, that if that floor is broken,
actually we've eroded it a bit, but each time we've hit this trend line, going back to 1988, we've exploded off the line. This time the dollar's laying on the line. In other words, it's like, it's hugging the line. It's saying, I got to hold. But it's not mustering a rally of any consequence, and it hasn't for a year, and it's tried like 3 or 4 times.
So the point is, it seems to me the point in my mind is that if it breaks that uptrend, that 33-year...
Yes.
Then we're looking at something very significant on the downside, potentially.
I would say you don't want to see 91 traded again. Certainly don't want to see 90 traded again on the dollar index. Right now the dollar's at 93. It's dollar index. So you're a couple percent above death numbers. And I don't think the dollar is a leader. It's a glacial market. A 10% move in that market is monstrous.
Oh, sure.
It's not going to, and so I see, another major decline in the dollar coming after this holding pattern breaks down, and I think it's going to break down. But it's not a leading market, so to look at it as a leader is misleading. In fact, if you look for dollar leadership, you would never have gone long gold.
Right.
Back in 2015 or 16.
That's true. That's true.
Where's the dollar? It's where it was then,
gold and treasuries and the dollar, the place to go. A lot of people went to during times of trouble. Michael, thank you so much for your insights. Very, very valuable, as always. And we'll look to talk to you in a couple of weeks from now again if you're available. So thank you so much.
Thanks, Jay.